Let's bring in Alison, Omens, Chief Strategy Officer at Just Capital, which is a nonprofit that does a lot of these kind of rankings. Alison, it's great to have you. Talk about what led these five to be the winners in terms of the policies that they extend to their workers.
Sure, and thanks for having me. The first thing to understand about this list is that we were trying to elevate the issue of health broadly and the impact that companies have on workers, families, and communities. And so these five companies are particularly good at thinking about health sort of holistically. And what we mean by that is, for example, NVIDIA, top of the list, has unlimited paid sick leave policies for their workers. Microsoft is really good on paid family leave, including thinking about childcare for working parents and mothers in particular. Bank of America has done a number of things on pay raises, hazard pay, financial assistant grants. So those sorts of issues, from paid sick leave to supporting workers, families, and helping workers make sure that they're making ends meet every month, is sort of the broad version of health.
I think it's interesting you also looked at the stock market performance and the outperformance of some of these companies and whether you're trying to make a link there.
Yeah, so the top performers, the top 100 of this list, outperform the Russell 1000 overall by almost 5%. And that's pretty consistent with the kind of work that Just Capital does. As you said, we're a nonprofit, but we do a lot of tracking of what financial performance actually looks like in addition to stakeholder performance. And so it's a pretty consistent story that we see that companies that are investing in their stakeholders overall, and again, that's workers, communities, the environment, as well as their shareholders, do tend to outperform. And the other thing about health, and again, this broad definition of health, is that when we are looking at research on the business case for investing in workers, investing in training, investing in racial equity and DE&I, over the long term, we also see outperformance. We see that those companies that are taking an investment and perhaps some initial costs associated with it, in the long term are performing in a way that that puts them above their peers. And so that's a really important aspect to this, and one of the things that we continue to dig into.
Alison, whether it does lead to better share price performance as well or not, I mean, there's debate about stakeholder capitalism following statements that were issued over the last couple of years by the Business Roundtable and others. You know, it's something we talk about a lot, and often we ask whether it is just window dressing. And in fact, bottom line, these companies still ultimately care about shareholder returns, not stakeholder quality of life and things like that. When we look at those companies that you mentioned that make the top 10 of your list, do you think they really are putting their stakeholders ahead of their shareholders if you were asked to pick between the two?
Well, first of all, I have to reject the premise, because part of what we're trying to do is say that you don't have to pick shareholders over your other stakeholders. And we are, in fact, assessing not just stakeholder performance, are you paying more than your competitor, but actually are looking at returns as part of the assessment. And so organizations like Just Capital, which is tracking companies on stakeholder performance overall, including return on investment, that is our job, right? Our job, as we see it, is to both advance the concept of stakeholder capitalism, as well as understand which companies are delivering and up to those promises. And so that really is a critical element of this next period of time. It was particularly acute during the pandemic, the racial reckonings, recognizing that there are a number of companies that sort of have the window dressing, to your point, but others really are walking the walk. And that takes a lot of time. It takes a lot of time. It takes a lot of resources. And so this next sort of post-pandemic environment of looking to see which companies who may have done really good things on paid sick leave, on hazard pay, which ones will continue to concretize what has happened, and which ones may be looking to 2019, the beginning of 2020, to say we want to go back to that. And that's really an important question that organizations like Just Capital are actively thinking on and tracking.
Shepard Smith here. Thanks for watching CNBC on YouTube.